Welcome back to our accounting adventure. In each episode, we'll tackle a different part of the accounting process, starting from the very beginning and following through just like you would on the job. No skipping ahead, no starting in the middle. We're building a strong foundation from scratch. By taking this series of accounting tutorials, you will master accounting before you know it. Unlike accounting textbooks that throw you into the deep by starting in the middle of the cycle and start performing all kinds of different analysis without providing you with the necessary foundation, we'll guide you step by step. Accounting shouldn't be as hard as they make it. In Episode 1, Johnny set up a lemonade stand business. In that episode, we covered debits and credits, assets, liabilities, revenues, expenses, and the general journal. We recorded his first month's transactions in the general journal. If you haven't watched Episode 1, you can click on the Watch card now. In this episode, we will look at the accounting cycle and how to set up a chart of accounts. We will use the general journal created in Episode 1 to create a general ledger. Stay to the end of the video to learn how you can get free content. A general journal is a fundamental component of the accounting system. It is often referred to as the Book of Original Entry because it is the first place where transactions are formally recorded. The primary purpose and use of a general journal include the following. The general journal is used to record all financial transactions of a business in date order. Each entry provides a complete and detailed record of a transaction, including the date, accounts affected, amounts, and a brief description. By recording transactions as they occur, the general journal helps ensure that financial data is accurate and up to date. If there is an error in another financial statement, the original transaction can be traced back to its source in the general journal. The general journal allows for detailed descriptions of each transaction, providing context and clarity that isn't available in other ledgers or statements. The general journal helps ensure that each transaction is recorded with corresponding debits and credits, maintaining the accounting equation assets equal liabilities plus owner's equity. The general journal is just one of the financial statements in the accounting cycle. The typical order of the accounting cycle is create a chart of accounts, followed by the general journal, the general ledger, the trial balance, adjusting entries, adjusted trial balance, the income statement, the statement of retained earnings, the balance sheet, and then the statement of cash flows. This order ensures a logical flow from recording transactions to preparing comprehensive financial statements. The chart of accounts is a list of all of the account names you use in the general journal, along with numbers that you associate with those account names. The chart of accounts needs to be listed and numbered in a particular order. That order is assets, liabilities, owner's equity, revenue, and then expenses. I created the general journal before I created the chart of accounts to make it easier to understand for this tutorial. If you are starting a new business, you will probably want to create a chart of accounts with the account names that you are sure you are going to be using in your business, and then add additional accounts as you need them. If this is the first accounting cycle of a new business, and you are not sure what accounts you will need, you may want to add the accounts in the chart of accounts as the need arises for your general journal entries. I will first go through all of the asset accounts in the May General Journal for Johnny's Lemonade business. The first asset listed in the journal is cash. Asset numbers usually start with 100 or 1,000. A large company may have thousands of accounts and sub-accounts. They may list their chart of accounts by thousands. For example, assets might start with 1,000, then liabilities with 2,000, and so on. Since we are dealing with a small business, I will enter 100 for the account identification number and the name cash for the account name. The next asset I find in the journal is inventory. I will assign it a number of 105. I didn't assign it a number of 101 because you want to have available numbers for when you need to add additional accounts. You may want to even have a wider variance in numbers if you are going to have a lot of accounts. The next asset is the lemonade stand. I am assigning it the number 110. Liabilities are next. Liabilities usually start with 200 or 2,000. There is only one liability, and it is accounts payable, so I will assign it the number 200. The third grouping in the chart of accounts is owner's equity. Owner's equity accounts start with 300. There is only one owner's equity account, and that is owner's capital, so it is assigned the number 300. Next, we have revenue. Revenue accounts start with 400, and since we only have one revenue account, which is sales, it gets assigned the number 400. Lastly, we have expenses. There are two expense accounts: advertising and cost of goods sold. Expense accounts start with 500. I will assign advertising a number of 500 and cost of goods sold the number 505. The chart of accounts ensures that all entries are classified correctly and consistently. By organizing accounts in a logical manner, it makes it easier to summarize financial data. Next, we will be looking at the general ledger. I have placed the general journal next to it because we will be entering account numbers into the post-ref column of the general journal as we enter transaction values into the general ledger. Post-ref is the commonly used abbreviation for post-reference. I have also placed the chart of accounts on the page so that you can visualize how these three work together. When you add an account into the general ledger, you need to place the account name in the upper left-hand corner and the account number in the upper right-hand corner. You need to create 5 columns with the headings Date, Post, Debit, Credit, and Balance. The general ledger, often referred to as the GL, is the central repository of a company's financial data, providing a complete record of all financial transactions over the life of the organization. It serves as the backbone for financial record keeping and reporting. We will be manually posting transactions into the ledger, but if you have a computerized accounting system, the system might do it automatically for you. Either way, you need to know how it works. The general ledger contains detailed accounts of every financial transaction, categorized by type. This includes assets, liabilities, equity, revenues, and expenses. Each transaction recorded in the general ledger is based on the double-entry accounting system, where every debit entry must have a corresponding credit entry, ensuring the accounting equation assets equal liabilities plus owner's equity always remains balanced. The general ledger is developed by going through each general journal transaction and recording the values into one of the account names we specified in the chart of accounts as either a debit or credit, then updating the balance. Let's start with the first general journal transaction. This transaction occurred on May 5th, when Johnny put $20 of his money into the business. The transaction involved a debit of $20 to cash and a credit of $20 to owner's capital. In the general ledger cash account, I will enter the date of the transaction from the general journal. In the post column, I will enter J1. The J1 means that the transaction was from the general journal, page 1. I will enter 20 in the debit column. I have formatted the Excel cells to automatically add decimal positions. I will also enter 20 in the balance column. In the general journal, I will enter 100 in the post-ref column. I entered 100 because this is the account number we associated with cash, which you should have entered in the upper right corner of the general ledger account. The second part of the transaction needs to be posted to the owner's capital account. I will enter the date for May 5th, 2024, then J1 for journal page 1. I will enter 20 in the credit column and in the balance column. I will enter 300 in the post-ref column of the general journal because this is the account number associated with owner's capital. In the next transaction, Johnny borrowed $100 from his parents. I will enter the date the transaction occurred and J1 in the post column of the cash account. The 100 is placed in the debit column of cash. I added a function to the Excel spreadsheet to automatically add the debit amount to the balance. The balance is now $120. The main purpose of the general ledger is to be able to look at any account and see its balance. This is why you need to post to the general ledger soon after recording the transaction in the general journal. In the general journal, I will enter 100 in the post-ref column. The second part of the transaction involves the accounts payable account. I will enter the date and post for the accounts payable account, and then $100 in the credit and balance columns. I will enter 200 in the post-reference column of the general journal for the accounts payable part of the transaction. I will demonstrate one more example, and then I will speed through the rest of them. In the third transaction, Johnny paid $40 in cash for the lemonade stand. I will enter the date, J1, and the debit and balance of $40 for the asset account lemonade stand. I will enter 110 in the post-reference column of the general journal for the purchase of the lemonade stand. Since Johnny paid cash for the lemonade stand, cash will be credited. I will enter the transaction date, J1 in the post column and $40 in the credit column. The credit amount is subtracted from the current balance, and the new balance is $80. I will enter 100 in the post-reference column of the general journal. There will not be any more audio for the rest of this section. We will complete the accounting cycle in Episode 3. In Episode 3, we will cover the rest of the accounting cycle from the trial balance all the way through to the statement of cash flows. Be sure to like, subscribe, and hit the notification bell so you never miss an update. Click on the link in the description below to get additional great free content. Share this video with your friends and colleagues. Comment below with any questions or suggestions for future tutorials. We love hearing from you. Have a great day.